welcome back once again to the Money Show. Let's now bring on board Pankaj Mathpal, the MD at Optima Money Managers, to address all your mutual fund queries. Before that, viewers, remember to keep sending us your queries on our WhatsApp number 865-797-4571. You can also email us your queries on the Money Show at etnow.tv. Pankaj, hi, thanks so much for taking the time out and joining us. Let's get kick-started with all the new queries coming in. And the first query is from our viewer Varsha. Now, her mother-in-law has 15 lakh rupees in her bank account and is getting a pension of 38,000 per month. If they don't need to spend this money, where would you advise them to invest this for the next 10 years perspective? Both the 15 lakh that is there as the lump sum as well as the monthly pension.
Basha, because you want to invest for your mother, so my suggestion would be that you have 15 lakh rupees, 5 lakh rupees you should keep for contingency. Say out of 5 lakh rupees, 2 lakh rupees you can invest in fixed deposit, and 3 lakh rupees you can park in short-term debt funds, and balance 10 lakh rupees can be invested in diversified mutual funds or hybrid funds where you can expect little better returns to beat inflation. So I'll suggest you some scheme name as well. So for fixed deposit, wherever you account, you can open fixed deposit account there. For debt fund for short term, as I mentioned, you can consider Axis short duration fund or Aditya Birla Sun Life short duration fund. And as I mentioned, 10 lakh rupees separately should invest in hybrid funds. For that, ICICI Prudential Multi-Asset Fund, Mahindra Manulife Balance Advantage Fund, and HDFC Balance Advantage Fund. These three funds are there. So if you're investing 10 lakh rupees, equally you can divide in three schemes. And also for this SIP in the same scheme, if you want to do 15,000 per month, 5,000 rupees in each scheme. ICICI Prudential Multi-Asset Fund, Mahindra Manulife Balance Advantage Fund, and HDFC Balance Advantage Fund, where you are investing in lump sum in the same scheme. You can start SIP.
Okay, thanks Pankaj for that view coming in. Now we're going to hit you with the next query coming in from our viewer Santu Mondal. He's asking if it is wise for a 37-year-old to take money out of a PPF and General Provident Fund to invest in the ICICI Value Discovery Fund for creating retirement corpus at the age of 60, though he is entitled for the West Bengal government pension. He may touch that at the age of 70 or 80, so not anytime soon, but would you advise shifting money like this out of a PPF to put into some scheme?
Santu, see, the importance of asset allocation. Your portfolio should have equity, debt, or commodity, etc. But because, as you mentioned, that you are 37 years old and considering retirement age of 60, so you have a long investment horizon. So considering that fact, I'll suggest that if you withdraw money from PPF account and invest that money in diversified equity mutual fund, it can be a good idea. But does not mean that you withdraw from PPF as well as from GPF. My suggestion would be that in your GPF account, whatever the amount is there and your regular contribution, you should stay invested and continue your contribution as is mandatory contribution. But for PPF account, as I suggested, you can withdraw that amount and invest in diversified equity funds. But as you mentioned, ICICI Prudential Value Discovery Fund, this is a good fund, good value style diversified fund, but still my suggestion is that you should not invest only in single scheme. This can be one of the schemes, but in addition to that, you can consider a flexi cap fund and a large and mid cap fund. So if you want to invest the whole amount, I don't know how much is the amount, but these schemes can be there: one large cap fund, large and mid cap fund, one flexi cap fund, and one this ICICI Prudential Value Discovery Fund.
Alright, well, the next query is coming in from our viewer Shashi Kumar. He's 62 years old and a retired pensioner. He has a mutual fund portfolio invested 60% in equity, 40% in debt, real estate and gold. Now, he's invested in large cap, large and flexi, mid and small and value funds on the equity side and the conservative debt funds when it comes to the debt side. The equity investment is roughly 75% in large, 15% in mid caps and 10% in small caps. He has also invested in an arbitrage fund for emergency purposes, and the goal here is wealth creation in the long run to maintain the same standard of living and to finance traveling within the country and abroad. He has a list of questions that we have already shared with you. Could you please guide him on what your outlook is here?
See, because you have there are multiple questions, so I'll answer one by one. See, first question: whether it should move from flexi cap from large cap to flexi cap. See, flexi cap serve the different objective. Though, as you mentioned that HDFC flexi cap fund or Parakparik flexi cap fund, these funds have higher allocation in large cap. These are large cap biased flexi cap fund, but because flexi cap fund have an flexibility to switch from large cap to mid cap or to small cap. But if you invest in large cap fund, in that case, minimum 80% of the asset has to be allocated in large cap oriented equity shares or equity related instruments. So considering that fact, I'll suggest you that if you want to reduce some exposure from large cap and rebalance your portfolio, want to increase your allocation in flexi cap, you can consider that, but it does not mean that totally you move from the large cap funds to flexi cap fund. So that is answer to your first query. You should have some allocation in large cap, but you can increase your allocation to flexi cap if you want that. Second thing regarding, may I said large and mid cap fund, you may not be very happy with the performance, but let me tell you, going forward, I expect that the performance may improve in the fund. So my suggestion would be that you stay invested. You cannot switch so frequently from one scheme to another scheme. So better stay invested. Otherwise, you have to pay capital gain tax as well on the profit amount on the capital gains. But still, if you want to switch from this scheme to another scheme, the alternative can be Motilal Oswal large and mid cap fund. So in the same category, that can be another choice for you. Third question is regarding international exposure. Though through Parakparik Flexi Cap Fund, you have a small exposure in international equity. But yes, for geographical diversification, it is always a good idea to have allocation in international fund. But because right now there are a very few funds which are accepting cash subscription, Motilal Oswal Nasdaq 100 Fund of Fund can be considered for this purpose. And regarding this debt investment, because one question you have that where you want to invest in debt. So short-term debt fund can be considered. I'll suggest you few schemes as well. ICICI Prudential short-term fund and Aditya Birla Sun Life short-term fund. You can consider some allocation in these debt-oriented funds.
Well, thanks Pankaj for that detailed answer coming in. On that note, we'll let you go. But viewers, remember to keep writing to us, keep sending us your mutual fund portfolio queries. I'm Snehisha. We'll wrap it up on this edition of The Money Show. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.